Monday, December 4th, 2023, Monaco 64, home of alternative economics and contrarian views. So we're entering a very interesting stage here in the currency market. Overnight, we've seen fiat currencies collapse versus gold. Yes, it's not gold that's going up. That's what we need to understand. It's the fiat currencies, especially the dollar, and all the other major currencies that are basically under threat. And I think what the powers that be don't want is this volatility, this explosive move up in gold or crash in fiat currencies. And why is that? Well, that would lead to people realizing that they can't get gold for their crappy fiat currencies. And why is that? Well, because when crappy fiat currencies trade like a yo-yo versus real money, the dealers are not going to be out there making a market on it, and people won't want to get rid of their gold with all this volatility because they don't know how much they can get for it. And there lies the problem for fiat currencies. It's the volatility versus real money. And by real money, I don't mean trading on COMEX or trading an ETF. I mean being able to get the real thing. In the end of the day, this is the only thing that's going to survive. And why is that? Well, because fiat currencies are all based on an elusive value or mythical values, as President Putin said a few years ago. And I'm not defending him, but he was right about that. Fiat currency can be created ad infinitum. It's basically worthless. It will go to zero. So I think we're entering that stage. Yes, some people are going to say, well, they've come in now when London opens with Europe and they've smashed it down. Maybe a little bit, but I think this is all just technicals. It's normal that once we break out a 12-year level, it exploded higher, of course, and now it's retesting that breakout. That's the way I see it. I could be wrong. I could be getting ahead of myself, but we'll find out in the next week or two, I think, what's going on. If things calm down, then I'm wrong. But if not, I think we're in for very interesting times. So, long introduction, I guess, before I go on and we look at some of the moves in gold. I wanted to say that, yes, thank you for all the interest in the channel. Continue to subscribe, please, if you haven't subscribed and you enjoy my videos. And make sure you hit the notification bell. Make sure you hit the like button if you enjoy my videos, and share it as well. And the other thing I would say, thank you for your support. A lot of you have supported the channel through the use of my affiliates and other things that you can do to support the channel. Everything is below in the description of this video and all my videos for that matter. So last night I finished my live stream with Clive, which went really well. I think we had like 1,200 concurrent viewers at the same time, which is pretty good for a live stream. And we finished a little later, just after 10 p.m. London time. And about an hour later, I turned on my system and I saw that gold opened. It was pretty steady, up $1 or $2. It was trading around 2,074. And I didn't think much of it. And then I went up to get ready to go to bed. I was brushing my teeth. Then I came back down and I saw a message from Clive on LinkedIn. He said, gold is flying. And I thought, really? And then I turned my system back on. It was trading 2,130 or 140. So was I surprised? Not really, because Well, we've had a long period of, I would say, price suppression that started, well, back in 2011, August 2011. They've been having a tougher time keeping it up, keeping it, suppressed, of course, since 2020, because we've actually moved higher from that high in 2011. But for the last 3 years, they've been able to keep it from exploding higher. And I think this is what's happening here. They're losing control. And what does this mean for the system, I think? Well, it means that after years of inflating massively the system, since 2008 and 9, the major central banks, they created something like 20 to 25 trillion, maybe more in total funny money. Yes, gold has gone up from 1,000 to around 2,000 since '08, but in my opinion, that's peanuts compared to all the inflation they created. And by inflation, I don't mean the CPI. Wake up, guys and girls. CPI is not inflation. Inflation is the creation of fiat currency out of thin air, not backed by real money or gold. So after all those years, we should be a lot higher, and the reason we aren't, or the currency should be a lot lower, worth a lot less in terms of real money. And that's why I think we could be entering that stage. And am I saying this because I want gold to go up? No, I don't care. I don't care, because that's not the point of having gold. The point of having gold is protecting your purchasing power from a year ago, 2 years ago, 3, 4, 5, and so on. It's not about making fiat currency. Do you think the people in Venezuela who own gold, those who were trading it, do you think they've done well? Do you think that they've been successful if they've got loads of bolivars more than they had 10 years ago? No. And this is going to be the same thing for us in the West. And you might think it's crazy, but we're not exempt to the laws of economics. And I think that's what's happening. So I think it's going to get to the point where it's going to be very hard to get physical gold and silver. I'm not sure we're there yet, but we're getting close to it. I've noticed some dealers online, they've got messages. Now it's gone off overnight. One of the dealers, I'm not going to mention names, said, we can't deal right now because of maintenance. That's because if you're going to deal online and the market's doing all this, they can't make money. They can't give you a firm price. So that's what I'm trying to say here. I'm not trying to tell you, go out there and get physical gold and silver while you still can. That's for you to decide, but that's the way I see it. And is there anything else out that could be affecting this? Maybe, they'll come out with reasons for this move, or, the skirmishes in the Red Sea over the last 24 hours. Or in the mainstream, they say, oh, we're shocked. We don't know why gold is going up or the currencies are going down. Hopefully by now you should know. It's, it's just a consequence of all the inflation we've had over a decade and a half, and it hasn't stopped. Yes, the Fed has been doing QT, but it has also been doing BTFP and many other things that we don't know, providing a liquidity to a zombie banking system. And it's not just the US that has a zombie banking system. And so the other thing this will do, of course, is put gold back into the headlines, I think, because I noticed this weekend gold closed at an all-time high, and there's very little coverage of it on places like the FT and all the other mainstream media. And it's strange, isn't it? So interesting times. And with that, let's quickly look at where the markets are this morning. And yeah, so it's 8:30 a.m. London time. So we got spot gold at 2,064. Yeah, we're now down $8. The high was around 2,150, 2,150. On my system is 2,148. On TradingView, they've got a high of, let's see, 2148 as well. So it looks like that was the high. How come some systems have different prices? Well, because ultimately gold is traded as a currency in the Forex market. Yes, there is the COMEX futures, but and the Forex market is an over-the-counter market. And what does that mean? Well, it's not traded on official exchange. It's traded amongst banks, other counterparties, financial counterparties, and they have market makers that quote the market. And sometimes when there's a lot of volatility, it can trade at a certain price in Hong Kong, at a certain price in Sydney, at a certain price in London. Usually it's pretty tight, the difference, because there's something called arbitrage. But when it gets really wild, you could have different prices for gold. And that's why, because ultimately it's traded in the currency market. And the currency market is like probably the freest, well, kind of freest, kind of most traded market in the world. It's not the stock market. The currency market is where all the fiat currencies are traded against each other. So that's why there are differences in prices. So what's been the low? Well, the low has been 2,057. So that's where we are right now. I would say getting back above 2,070, that might lead to gold higher. And you could be listening to me in an hour, 2 or 3, and we could be at 2,100. We might even be testing 2,000. Who knows? It's going to get wild. And I made a video a few years ago saying that you need to hold on to your gold and silver, because ultimately when things hit, the proverbial hit the fan, it's going to get really wild. So what about silver? Well, silver got up to 25.94. It's still underperforming gold, unfortunately. I still think the just above 26 is the key level now. Right now it's down 30 cents at 25.17, and the low has been 25.10. What about the other markets? Well, the Dow futures is down just 50 points. The Nasdaq is down 44. S&P is down 9. The currency market, the fiat currency market, or Forex, sterling is down a third, 126.68. The euro is down an eighth, 108.69. Dollar is up slightly versus the yen, 146.90. The dollar is up 0.2 versus the yuan at 713.87. Aussie dollar is down 0.5% at 66.38. Dollar is up a third versus the Canadian dollar, 135.39. And the Kiwi dollar is down 0.5% at 61.78. Finish with the commodities. We got WTI crude down 1%, 73.30. Brent is down 1%, 77.91. Platinum is down $13 at 922. So a lot of volatility here in the commodities too. I see they're all in the red at the moment. High grade copper is down almost 2% at 385. Let's finish with the bond market. The US 10-year yield is up 2 basis points at 4.25. The UK 2-year yield is just below 4.60, so not much to write home about there. The 30 years up 7 basis points at 475. So with that, I'm going to wish you all a very good start to the week and a very good day. Take care. Bye.